Good afternoon, traders, and welcome back to the Hot Stocks Outlook for February 15th, 2019. Hope you're all having a great week out in the financial markets, and as always, plenty of great opportunities to cover as we've had a really nice bullish wave really since the beginning of the year here, all throughout different areas of the equity market. So we're going to start here. We've got Skechers, CROX, so a couple of shoe manufacturers there. We've got Monster Beverage, AvalonBay, and also Ulta. And actually, AvalonBay and Ulta we've covered over the past few weeks, but I want to highlight how these forecasts update as you work through a trade. So as you're managing that position through time, how these indicators help to make those adjustments and get the best out of these opportunities. So starting here with Skechers, though, is a good example of how each one of these indicators really works independently here. So what we have are daily bars and candles. So each one of these bars here represents a full trading day. So everything here working off of end of day data. And there's a few indicators on the chart. Now, right up against the price data, you see that there is a black line there and a blue line. Now, the black line that you see is what we refer to as a actual or simple moving average. So that's a very common technical indicator, very easy to plot. If you were plotting a 10-day simple moving average, just take the 10 days, add those all together, divide by 10, and you're going to plot that line rolling forward. So nothing really special there, and all that data is coming from the market for Skechers, but it's also all just past prices being summarized and creating that value. Now, what we're more interested is in the comparison between what we're looking at with this blue value that's generated via the technology here within VantagePoint. So that value, for it to be generated, is looking at intermarket relationships. So how Skechers shares relationships with, possibly, Nike, other shoe companies, ETFs, the dollar index, the S&P 500. And what that technology is able to determine is how are those other markets influencing and affecting, and how does that factor into the future price movements of the target market here, in this case, Skechers. So whenever you see that blue line or that predicted moving average move above the actual moving average, it's telling you, look, prices are expected to move higher. And when we look at all the different stocks throughout the market, you have a lot of trending markets where the blue line has been well above the black line all throughout the month of January. But you see, we get this crossover here really again at the beginning of January, end of December here. But there's a couple of other indicators that round out this forecast and will help you, again, adjust those positions and really evolve your position over time. Now, at the very bottom of the screen, you see that we have this moves from a green. Some days it'll be a red. And this is an extremely accurate 48-hour indicator. So it's only looking at 2 candles at a time, essentially, looking forward on whether there's going to be short-term strength or weakness in the market. So when we combine that with our overall predicted moving average, and as long as that blue line remains above the black line, the trend is still up. Now, to really round out the entirety of these forecasts, you're also provided, before each and every trading day, a predicted trading range. So an actual prediction of the daily high and the daily low. So based on if you're trying to get long or trying to get short, you know where you want to be accepting positions in the market. And we can see that now over what's been a month and a half here in shares of Skechers, well, how would this work from a day-to-day perspective? Well, the trend is obviously up. You're getting some signs of weakness from the neural index at times temporarily, and you see you get those sideways actions where the market drifts and you get towards those predicted lows. But you would only want to be long in a market like this, right? You're only going long, taking profits on longs is really what I say here. And as long as that blue line remains above the black line, you're good to go. You see, this has resulted in a little formatting here. These predicted lows are actually way down here, but 1, 2, 3, 4, 5, 6, 7 entries into this market long before things gap up and really start moving. So this has just been a really fantastic opportunity. But again, I wanted to bring this in to show not only the 41% move to the upside, or $9 per share on only a $20 stock. So I mean, this is something you could easily buy a couple thousand shares of. But a huge move, over $10 per share, are getting there. But really, this is what I want to highlight is Neural Index saying, look, there's going to be some weakness and some sideways action, but the blue line's still above the black line. Trend is still up. So you're going to see those periods where you may trade below the predicted moving average because you have this bearishness in the Neural Index. So you'll trade above and below that average, but the direction's still to the upside, and you want to be involved in every bit of that 41% move to the upside as you can. Now, What's so important here is we've been in a very bullish market environment, but all markets are not created equal, right? And everything's going to have its own unique sort of characteristics on what's going on. And this is where VantagePoint is really helpful. You see Crocs, another shoe manufacturer, obviously very different than Skechers, but very clearly this has not been the month to be getting long Crocs. And you see for the past several weeks, well, what has it been telling you? Well, look to short the market. The market's in a downtrend. Well, what would you want to be doing? Well, you'd want to be shorting up at these predicted highs. And you see how just day after day, these levels are achieved, and immediately that trend continues and the market moves lower. So just another example here of, yes, there's been a great, opportunities all throughout the markets to be getting long, but there's other areas where you shouldn't be messing around here, right? We've had 2 or 3 weeks where markets have almost gone straight up, a lot of bullishness, but Crocs here down about 8% and multiple 2 or 3% drops from those daily predicted highs. And that's the whole point, is using this software to understand how to adapt to a changing market condition and get the most of really periods like this where we have these great bullish waves. It makes sense to go ahead and get long and be adding to your position along the way with those profits here. Here's Monster Beverage, crossover to the upside. So you get these periods where when the neural index goes bearish, usually that's a warning sign for me that says, okay, well, you may trade below this predicted moving average, right? With an average, you can trade above it, you can trade below it, but when are we likely to trade below it and get a little bit of dip? But you understand that that's the period where you want to buy on those dips. And again, we see, okay, here in Monster Beverage, well, how does this work in the day-to-day? Well, it's entry here, entry here, entry here. You see this day, you get a little bit outside the range. You're actually coming to the previous day's predicted low. You see that from time to time. But look how quickly the software's back on track, pointing out these daily predicted lows and making these adjustments so that you can be buying 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 or so entries where within a day after getting into the market's already moving higher and continuing its trend. So again, just another great example of a market that over the entirety moved up 19%, but there's a lot of little 2 and 3% moves in there when you're buying at predicted lows, adding to that position. Maybe you're long 100 shares back here, but then you're long 200 or 300 at these predicted lows and really adding to the position that way. AvalonBay here. So these are a couple markets that over January we've already covered at least once or twice. I think Avalon we brought in really towards the end of somewhere around here, towards the end of January. But here's the key again is how to make those trade adjustments and evolve with the market as it moves forward, because we don't want to get into the market and then get out after 3 days if the trend is still up. And so you have to make those determinations of, okay, am I going to stick it out in this market? And here in Avalon, we've highlighted this at least a couple weeks ago where we got this crossover to the upside. Our predicted highs and lows will bring those up, doing a really great job. But what I want to focus on is the last couple of weeks. So, even though we came in and highlighted this really nice move here in Avalon, along with all these other stocks as they're moving up, well, what's been going over the past couple weeks where you've seen more volatility? Well, where would you be a buyer? Down here, down here, down here, down here, down here. So intraday, you're getting great levels to get involved with the market. And we see that, over these, pretty much these daily ranges, a 2.5% move there. Another, longer than 2.5% move here from the predicted low to another predicted high, another, percent or so, up in this range. So there's a lot of opportunity to, even when the market's running sideways, be capturing, 2 or 3% on little shorter term day trades where you're adding to that position that you may have already been in for, a month here, but now making the most of it and using those profits to, get as much as you can. Last here with Ulta, and we just covered this, numerous times here. And again, the point being to highlight how you'll understand to get into a market when it's bullish or bearish and what you should be doing, but it's more about, okay, well, when things run sideways, should you be adjusting your position? We don't have a blue line crossing below the black line, right? So we never got into a downtrend. So it's how those clues come in and evolve to help you understand how to adapt your position is really what it's about, is adapting that position size and managing what we've seen as a longer term, nice bullish run here. And you want to get the best of it, right? So here's Ulta here. We've got, we'll bring up these predicted lows here. And we see earlier on in this trade, nice opportunities to get in here down at, 240, 245 or so. Just look over the past couple of weeks where if you're a trader in this market, you see a lot of bullishness over the, really week and a half here. But even over this sideways period, what do you want to be doing? Well, buying at predicted lows, taking some profit at predicted highs. This will have you, improving that position along the way and knowing really when to take action in the market. When this market is intraday, dipping down to these levels, I'm sure it's not staying there for long, but you've got an order waiting and resting because all these orders or all these levels here really identified the day ahead of time. You had all this information to go in and make the most of really what's been a great month in the market as far as equities go. We had crude oil has been running a little bit sideways for the past week here, but crude oil started moving higher, equities moving higher. You see another 26% mover, $63 per share. Really great options play if you like using options with those higher price stocks. But really the bigger point here is regardless of how many shares you buy, if you buy 100 shares, if you buy 10 shares, you're getting a 26% return on that position size, and that is a really, really nice move. And we've just seen it again just throughout all these different markets. Not Crocs there, but certainly these other markets we've been highlighting all throughout this month here. So that'll round out our hot stocks outlook for February 15th, 2019. Thank you all for watching. Best of luck to all you traders out there in the markets. Thanks again, and bye for now.